Clever people make terrible traders and terrible investors. I've done a video on the difference between the two. But why? Surely the more smart you are, the better you'd be at trading and investing. Surely, right? Because they're just smarter. Well, no. You need a kill switch if you're clever. Let me explain. Clever people make terrible traders because they have a lifetime of being right. What the hell are you talking about? Well, they were right as a kid. They were right at school. They were right at university. They were right in their job probably. And suddenly when they're a trader, they're wrong. I'm deadly serious. And they can't cope. They can't cope because it's why doctors make terrible traders. They're used to being right. Lawyers are the worst because lawyers think they're right. So lawyers think that because they're so clever, because I'm a lawyer, and I always talk to everyone as if they're wrong and I'm right because I'm a lawyer, they make the worst traders because when you invest, you're 50-50. You know nothing. And they'll never be humble enough to admit and to come to terms with trading isn't about being right. Yet they won't be able to cope with that because they're mentally set up from their lifetime and then their career choices to being right. When they they always try and dissect the market and predict it. Got a friend, typical lawyer. He's had a lifetime of being right. Lifetime of, I'm a genius, I'm a lawyer, I'm an M&A lawyer. And when he comes to putting his money in investments, he doesn't trade, he likes to make kind of, well, you could say he's a swing trader. He does themes that he hopes will play out. So I see him, because he knows what I do, and he's like, oh, what do you think about the Chinese economy? It's blah, 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 blah. And he has this kind of idea. And I'm like, well, yeah, it's in the price. Oh, but, they're going to go to war with Taiwan and blah, 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 blah. And I'm like, that's in the price. And he's like, what do you mean it's in the price? I was like, everything you say, everything you think is in the price. Nothing you've said suggests that the asset you're suggesting to buy or sell is mispriced. So you're just placing a 50-50 bet. And yeah, 50% of the time you'll make money on it and 50% of the time you'll lose. And because of the way your brain is structured, you'll lose more than you'll make on your winners because you won't be able to cope with drawdowns. So you'll buckle, and when you're up, you won't be able to cope. You won't make enough out of your wins to offset your losses. So even though you're 50-50, long term you'll lose money. Well, I have a good idea of global macroeconomics. So what is in the price? And for years these guys can bet right and have the right idea because you're in a bull market. We're all geniuses in a bull market. Even my mum's a genius in a bull market. So someone like that cannot come to terms with that their probability is 50-50. So they'll always make a bad trader. They can never come to terms with that in the investing world. It doesn't matter what your future view is. It's in the price. And it freaks them out when I say that. The market sees forward, backwards, sideways, up and down. It's in the price. An edge is only when an asset is mispriced. And your worldview is not a misprice. Anyway, so that's why clever people make terrible traders. The best traders actually approach the market in a completely different way. They've done some deep thinking and they've gone, every trade, I'll explain what I mean by a 50-50 trade in another video, but every trade's a 50-50 bet. They've gone, okay, I've got no edge here. How do I get edge? Well, hang on, can I sell when things are expensive and buy when things are cheap? Yes, that sounds like something I can do. Can I measure cheap versus expensive? Yes. What is true in the market? There is a motion emotions, human emotions in the market. Things can overreact. Prices can overreact to the downside and overreact to the upside. Now we're talking. And when you speak to your lawyers, they're not on this frame. They're still at phase one, where they think they're just, their worldview is superior, and that somehow just because Tesla makes electric cars, that it's going to go up tenfold this year because the sales are up. Mate, that's in the price. As soon as a thought is out there in the ether, it is literally in the price. I don't know if you can hear my son. He's being treated by a physio, and they pummel out the knots in like his legs and shoulders and stuff. So he just starts wailing. I could just hear him wailing. Anyway, so that's the problem with clever people. They're totally unhumble, and it takes a next level thinking for someone clever to come to terms with the stock market and how it actually operates. And then the trouble is when you get someone clever that realizes that they're looking for that oversold, overbought, cheap versus expensive, and then they play in the keys of volatility and price movement, then you've got someone, I was going to say dangerous, but then you're making your way towards a trader or an investor. And once they start then working out probabilities and risk and structured investment strategies, then you're cooking on gas. And then the next phase is position sizing and position management, and literally doing the opposite to what your human reactions tell you. When you want to bail, it's when you double down. When you want to take profits, it's when you add more. So I guess the summary of someone clever and what to look out for is ego. Ego is the danger factor if you're clever, because someone with an ego can never be wrong or can't cope with being wrong. So that's where they'll always fail. And so if you're someone with an ego, when you become a trader, you need to remap that. You need to slice off your ego. You need to work on yourself and take away your ego. You are nothing. You know nothing. But what is true in the market? What are you really seeing? Can you for 1 minute tell me the future? The answer's no. I can tell you the answer's no. You can't see the future. And then people say, well, how can you make money if you can't see the future, if you can't predict? That's when you step back and you go, what is true of the market? This is true, up and down, expensive, cheap. Does a market trader in the Moroccan spice markets make money? Yes, he does. How does he make money? This for me is the core of trading. I've thought about it for weeks, for months, for years. This is the core of trading. I'm telling myself it because no one watches these videos, so telling myself. They buy their goods when they're cheap, and they sell them when they're just a tiny little bit more expensive. And then they manage their portfolio, don't they? They buy in fruits when they're cheap, and they sell them when they're on the market. Market price is a little bit more expensive. Then they buy in more fruits. And the ones that have gone down, well, they just sit on them. And the ones that have gone cheaper, I'll buy a little bit more, stock up their inventory, don't they? Oh, the price has now gone up because that was a natural low. Well, I'll sell some then. And you see that? Ching, 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 ching. They're literally ringing the cash register. And trading, that is trading. They were a little bit cheap, now they're a little bit expensive. The market trader, he's not guessing the future, is he? Think about it. He's not guessing the future. Apples have gone from 50 pence to 40 pence. Well, I'll buy some apples then, because that's cheap. He knows. Yeah, traders know when an asset is cheap. It's only trading that has people buying at the highs, selling at the lows. Only trading. If you see a cheap house, do you buy it or do you wait? Oh no, I'll wait till it goes back up. You buy it. So think of yourself as a market stall fruit trader. Lemons have just dropped to 30p. Well, I'll buy myself a bushel, or whatever the term is. I'll buy a basket of lemons. Oh, lemons are now about 40. Right, I'm selling it like all of them. I maybe keep a little bit. That's trading. Now, can a genius with ego do that? No, because he's sat there going, because he's a lawyer, Well, I think the lemon crop is good this year, so I will wait for thy lemons, and then I will buy them at 32, and I will sell them at 40, because that's my prediction. But it never happens, never comes. They're not opportunistic. There's opportunities in the market all over the place. So you've got to be quick wheeler dealer, haven't you, if you think about it? Because you need to incrementally earn that cash revenue, generate that free cash revenue, like a fruit trader. I hope I'm making sense here. I'm hoping you're getting the feeling for this. And this is exactly how I trade. I'm a fruit market seller. Just my things are stocks and done via a click of a button. Anyway, I think I've said it all. If you're a clever genius with an ego, sort your mental state out before you become a trader. If you're used to being right and you're a lawyer, I'm really sorry. This is probably not for you. If you're a doctor, you need to drop that ego. You ain't a doctor on the trading floor, mate. If you're a wheeler dealer and you're used to just transacting, you are going to be amazing, because you know you can't predict the future. You know it. I hope I've hit home there on a few things. I hope that's useful. That's it.